one fund on point for today, and the expert to talk about it. Welcome to the ETF of the Week. Yes, this is the ETF of the Week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth. He's the head of research at VettaFi, and if you go to VettaFi.com, you'll find all the tools and research you need to be a savvy, smart investor in ETFs. Todd Rosenbluth, it's great to chat with you again.
It's great to be back.
Your ETF of the Week is
the JPMorgan U.S. Tech Leaders ETF, JTEK, J-T-E-K.
JTEK, the JPMorgan U.S. Tech Leaders ETF. Well, tech has been leading a lot of things in this market for a long time, but why this fund now?
So there's a few things that caught my eye. This is an actively managed ETF from JPMorgan, which has become one of the leaders in actively managed ETFs. JTEK has gathered over $1 billion of new money this year. It actually hasn't even turned 2 years old, and it's over $2 billion in assets. It's outperforming what I would consider to be the leading place to get exposure to technology in a diversified manner. That's the Qs. It's JTEK is outperforming this year. And I'm sure we'll dive into this, but tech leaders does not necessarily mean companies that are in the technology sector. Management has discretion and uses it to invest in companies that are using technology, not necessarily in the technology sector.
Well, let's talk about that a little bit, because what I gleaned from a quick look at the portfolio is that this is kind of a way, people think of technology these days as everything AI, and there's a legitimate discussion of, do you want, AI or do you want AI adjacent? And this is kind of that AI adjacent, technology adjacent, at least a little bit, right?
Right. So many of the companies that are in this portfolio, you could probably connect the dots, some extremely directly. So NVIDIA is the largest holding. Snowflake is the second largest holding. I think you could connect Snowflake in to that space. But Robinhood, for example, is that third largest holding. Robinhood is actually a financial company, according to the GIC sector classification. But obviously, or not obviously, but people who are using Robinhood know that you're doing so on a website with cool bells and whistles from a technology standpoint. So I think Robinhood is a great example of a company that is tapping into technology to support its growth. And so I would think of this as more of a growth ETF, the way that I think of the Qs, the Invesco QQQ Trust, as opposed to a pure technology sector ETF.
Yeah, the one that stood out to me beyond Robinhood in the top 10 holdings when I looked was like ServiceNow, which, yes, it's a tech company, but it's really about, sort of servicing and providing solutions to other tech companies. So it's kind of tech adjacent.
Right.
That being the case, I mean, as you point out, still NVIDIA is the biggest player. At this point, when you evaluate an ETF and it's in the tech space, on the one hand, while you build a portfolio and you don't want tons of overlap, on the other hand, any fund that doesn't have NVIDIA in it or one or two Mag 7 stocks in it is likely to not be able to get past any investor's radar because it's just not going to have performance. So do you discount the fact that, like, almost any fund we talk about, if the word tech is in there, is going to have NVIDIA?
I think if you're going to have a technology-related strategy or even a growth strategy, then you're likely to find NVIDIA within the portfolio. What's not in this portfolio, at least in the top 10 holdings, as I'm looking at it off screen, is Apple or Microsoft. So this is active management deciding which of the companies within the technology or tech adjacent space are appropriate. And NVIDIA is roughly 5% of the portfolio, so it's actually larger, it is smaller. The NVIDIA weighting is larger than you'd find within some traditional index-based growth or technology sector ETFs. So I think before you get there, you have to understand what you own and decide, can this complement your overall portfolio? Depending upon what people own, I think this can complement and offer growth exposure, but in an active management manner.
I will point out the fund does have Microsoft. It's not in its top 10. It's in the top 20 holdings. But again, as you look through a portfolio, and we never second guess, we don't like go in and go, hey, whatever they're doing. This is an actively managed fund. You know it's going to have other things. But again, to prove that point that you're looking at about it, the way it plays the big names, is that this is a company that has a higher percentage of its assets in Shopify than it does in Amazon. And that was the other thing that I took out of it was that, okay, there's your side where, again, hard to be a tech leaders fund, say you're investing in leading technology companies and not have Amazon, but that active management side says, yeah, but Shopify, a bigger piece.
Right. And we're seeing more and more advisors and investors are turning to actively managed ETFs to benefit from that expertise, that discretion, that sorts through the universe, looks for companies from not only a fundamental basis, but a valuation basis. And you get the benefits of that experience, or hopefully you get the benefits in the returns. And thus far this year, JTEK has done its job of outperforming, at least what I was considering, the proxy of the Qs.
Where does this fit in with a portfolio? Because we know investors, I mean, if you don't have technology in your portfolio, you either don't have a portfolio or you're dead. Like there's just no way that people don't have exposure. And we've already talked a little bit about NVIDIA overlap. But where does this fit in? Who is this fund right for? And what are we trying to achieve with it if we're adding it to a portfolio that we know does have some of these big name stocks already?
So to me, this is a growth strategy. This is a large cap, but I guess the flexibility to own beyond large cap, this is, to me, would be a large cap growth strategy. So if you owned, we have 4 strategies that were tied to, well, I guess if you're tied to the S&P 500 and you want the benefits of active management to complement that, and you're willing to pay a little bit of a premium, this fund has, I believe, a fee of 65 basis points. You want to get the benefits of active management. This can be part of your growth slice of a portfolio. This can be a growth alternative. If you invested in the Qs, I feel like I've done that reference to the Qs a couple of times today. But this, for people who are increasingly comfortable and interested in active management, this could be 1 or 2 of your large cap strategies, but with a tilt towards growth.
It's JTEK, the JPMorgan U.S. Tech Leaders ETF. And it's the ETF of the week from Todd Rosenbluth at VettaFi. Todd, great stuff as always. See you again next week.
I'll see you next week, Chuck.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And I'm Chuck Jaffe. And yeah, I'd love it if you'd learn all about my hour-long weekday podcast. You can find it at moneylifeshow.com or wherever you find your favorite podcasts. Now, if you're searching for more information on your favorite ETFs, or maybe the thing that'll become your next favorite ETF, like today's pick, JTEK, go to VettaFi.com, where they've got a full suite of tools that's going to help you be a more confident, smarter investor. They're on X at Vetta_Fi. Todd Rosenbluth, their head of research, my guest, well, he's on X as well. He is at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Make sure you don't miss an episode by following along on your favorite podcast app. And we'll be back next week with another ETF for you to consider. Until then, happy investing, everybody.